Hey everyone, and welcome back to Investing Talk podcast. When a company hits a 52-week high, it usually makes headlines, for all the right reasons. But DTE Energy, the Detroit-based utility company, that trades under the ticker symbol DTE. Well, they're a bit of a puzzle right now. They just hit that 52-week high of $132.96 in late February. But their recent earnings report was, well, it was a mixed bag, and the market's been volatile to say the least. So what's going on here? Is DTE a hidden gem, or are we looking at a potential trap? Let's break it down.
Yeah, it is fascinating to see DTE Energy seemingly defy gravity while other companies struggle. They're in the utility sector,
Yeah.
which is usually seen as a safe haven during market dips, and that's definitely a factor, but there's more to the story than just playing it safe.
Right. Their Q4 2024 earnings report had, well, it had some head-scratching moments. They reported adjusted earnings of $1.51 per share, beating analyst expectations. But it was down from the previous year. And their full-year revenue was $12.5 billion, falling short of projections. They blamed a warm winter for impacting gas demand, which makes sense, but it still raises some eyebrows.
Yeah, it does, especially when you consider they also invested a record $2.5 billion in their utility infrastructure. That led to a nearly 70% reduction in customer power outages. It seems like they're playing the long game, focusing on reliability and future growth, rather than just chasing short-term profits.
That's a really interesting point. Could that be why investors are sticking with them despite the mixed earnings? I mean, the market's been shaky lately, especially in the tech sector, and investors are flocking to more defensive sectors like utilities.
Absolutely. And remember, it's not just about safety, it's about yield. DTE Energy offers a 3.41% dividend yield, which beats the average for the S&P 500. In fact, the entire utility electric power industry is boasting a yield of 3.28%, while the S&P 500 sits at a much lower 1.54%. For investors seeking steady income, that's a pretty compelling argument.
And when you look at DTE's relative strength rating, it's a solid 83, showing they're outperforming the market. So they're not just holding steady, they're thriving in a turbulent environment. But what about their growth prospects? I mean, utilities aren't exactly known for being high growth companies.
That's where DTE Energy gets really interesting. They've got this ambitious $30 billion five-year capital investment plan focused on upgrading their grid and transitioning to renewable energy. This is tapping into the growing trend of ESG investing, and they're positioning themselves as a leader in the green energy shift. That's a huge potential growth driver.
It's a bold move. And a smart one, considering the growing demand for sustainable solutions. It's not just about keeping the lights on anymore. It's about doing it responsibly. And they seem to be thinking ahead in other areas as well.
Right. For example, there's a surge in data center demand, which could add a whopping 2,100 megawatts to DTE Electric's service area. More data centers mean more demand for reliable and clean energy, playing right into their strength.
That's a significant increase. It sounds like they're well positioned to benefit from that trend. And on top of that, they're expected to receive $50–60 million annually in tax credits through 2027, thanks to the 45Z.
Yeah.
It's like they're hitting all the right notes.
Yeah, they are. But we have to be objective and consider the other side of the coin as well. Remember, no investment is without risk.
Yeah.
And there are some concerns about DTE Energy's strategy.
That's true. We've seen some mixed signals from analysts. While BMO Capital and Jefferies have raised their price targets on DTE, Barclays actually downgraded the stock, citing concerns about long-term earnings quality. It's like they're not convinced DTE can pull off this grand vision.
Yeah, Barclays' concerns stem from DTE's heavy reliance on large capital projects. They're worried about leverage and potential strain on the balance sheet. If those projects don't deliver as expected, it's a valid point.
Yeah.
Especially in a volatile economic environment.
So it sounds like we have this intriguing mix of fundamentals,
Yeah.
growth prospects, and some lingering uncertainties. But what about investor sentiment? I mean, are people actually buying into this story?
Well, the Wall Street consensus seems to be cautiously optimistic. The median 12-month price target for DPE is $138, suggesting there's still some potential upside. But then we have some insider activity. That might raise some eyebrows.
You're talking about Joanne Chavez,
Yeah.
the chief legal officer, selling a chunk of her stock worth over $935,000. And she did it near the 52-week high. Is that a red flag or just smart profit-taking?
It's hard to say for sure. It could be either. It's not uncommon for executives to sell shares after a strong run, and it doesn't necessarily mean they've lost faith in the company. However, it is something to keep in mind as we try to gauge investor sentiment.
Okay, so we've covered a lot of ground here, from earnings reports to analyst opinions, and even a bit of insider intrigue. But there's one piece of the puzzle we haven't touched on yet: the technical analysis. Are the charts telling us a different story than the fundamentals? This is where things can get really interesting, wouldn't you say?
Absolutely. Technical analysis can offer valuable insights into market sentiment and potential price movements. It's all about patterns, trends, and momentum. Let's dive in.
Well, looking at GTE's chart, it paints a rather bullish picture. We have that 52-week high, and the stock is currently trading above both its 50-day and 200-day moving averages. That's a classic sign of an uptrend.
Yes. But remember, no trend lasts forever. And looking at the relative strength index, or RSI, it's nearing overbought levels. That suggests a pause or even a correction might be on the horizon.
But wait, there's also the golden cross, where the 50-day moving average recently crossed above the 200-day moving average. That's usually seen as a bullish signal, right?
It is, but we can't ignore the declining volume on the recent pullback. This could mean selling pressure is easing, but it could also suggest waning buying enthusiasm. It's a bit of a mixed signal.
So what does all of this mean for someone like you who's following DTE Energy and considering investing? Is it a buy, hold, or a run for the hills situation?
Well, that depends on your individual investment goals and risk tolerance if you're looking for a long-term income play. DTE has a lot to offer with its attractive dividend yield and history of consistent growth.
For those who are focused on sustainability, you know their investments in renewable energy make them appealing to ESG-minded investors. It's like they're checking all the boxes.
Exactly. But remember that the stock has had a fantastic run if you're thinking about buying in. Waiting for a pullback to the $125 to $130 range, closer to its 50-day moving average might be a smarter move.
So you're saying patience is key here. Don't chase the hype, wait for a potential dip, and then consider jumping in.
Precisely. Remember, no investment is risk-free. We have to talk about the potential downsides.
Right. Barclays raised concerns about DTE's reliance on those large capital projects and the potential strain on their finances. And with interest rates rising, that debt could become even more burdensome.
Exactly. And we can't ignore the macroeconomic environment. Inflation is still a wild card, and that can impact any business.
And let's not forget, DTE's gas sales are influenced by the weather. A mild winter can really hurt their bottom line, as we saw this past year.
True. And while their growth prospects look promising, their revenue growth has been slower than the industry average. It's something to watch closely.
So we've covered a lot of ground here. We've talked about DTE's financials, their ambitious plans, the analyst opinions, and even what the charts are telling us. But what does it all mean for someone who's listening to this podcast and trying to figure out if DTE Energy is the right investment for them?
Well, I think the biggest takeaway is that DTE Energy offers a unique combination of characteristics. They've got those defensive qualities that investors seek during uncertain times, a steady dividend, a role as a provider of essential services, things that people need no matter what's happening in the economy.
Right. People will always need electricity, even if the stock market takes a nosedive. That makes DTE a pretty solid bet in a lot of ways.
Exactly. But they're not just sitting back and playing it safe. They're also making moves to position themselves for growth, especially in the renewable energy space. That makes them attractive to a broader range of investors, not just those seeking a safe haven.
It's like they're offering the best of both worlds, stability and growth potential.
Precisely. But timing is key. And the technical indicators suggest the stock might be due for a pause or correction. Patience could be a virtue here.
That makes sense. Chasing a stock that's already had a big run can be risky. It's better to wait for a potential dip and get a better entry point.
Exactly. So should we slap a buy, sell, or hold rating on DTE Energy?
That's the million-dollar question, isn't it? What's your verdict?
I would say it's a hold for now, especially for those who already own the stock. The company has solid fundamentals and compelling growth prospects, but the current price might be a bit stretched. Waiting for a pullback could offer a better entry point for new buyers.
And as always, we encourage our listeners to do their own research. Don't just take our word for it. Dig into DTE's financials. Read the analyst reports. And most importantly, consider your own investment goals and risk tolerance before making any decisions.
That's crucial. Investing is a personal journey, and what works for one person might not work for another. There's no one-size-fits-all approach.
This has been a fascinating look at DTE Energy. We've explored their strengths, their weaknesses, the opportunities, and the risks. Hopefully, you've gained some valuable insights to help you make informed decisions about your own portfolio.
We've certainly tried to provide our listeners with a balanced perspective. Now it's up to them to decide whether DTE Energy is the right fit for their investment strategy.
And on that note, we want to remind our listeners to subscribe to Investing Talk podcast. Share this episode with your friends and leave us a comment. We love hearing your thoughts and feedback.
And who knows, maybe this episode will spark some interesting discussions in the comments section.
I hope so. We love interacting with our listeners. It helps us stay on top of what's happening in the market and what you're interested in learning about.
After all, this podcast is all about helping you make informed investment decisions. We're not here to give financial advice, but we do want to empower you with knowledge and insights so you can make the best choices for your financial future.
Exactly. We're like that friend who reads all the financial news so you don't have to.
Mm.
And then we break it down in a way that's hopefully engaging and easy to understand.
And maybe we'll even crack a few jokes along the way.
Hey, you're the one who made that joke about the stock market being like a roller coaster.
Okay. I'll take credit for that one. But seriously, we take this responsibility very seriously. We know that people rely on us for accurate and unbiased information.
And that's why we always encourage our listeners to do their own research. Don't blindly follow what we say. Dig deeper, challenge our assumptions, and come to your own conclusion.
That's the beauty of investing. It's a continuous learning process. There's always something new to discover, some new trend to analyze, some new opportunity to explore.
And that's what keeps it so exciting. So as we wrap up this episode, we want to leave you with one final thought. We've talked about DTE Energy's move towards sustainability and how they're positioning themselves as a leader in the green energy shift. But what if this isn't just a trend? What if this focus on ESG investing is a sign of a much bigger change, a fundamental shift in how we think about business and the role companies play in society?
That's a really thought-provoking question, if that's the case. Companies like DTE Energy, who are making those investments early on, could be poised for even greater success in the future.
Yeah, it's not just about making money. It's about making a positive impact. And investors are starting to recognize.
Absolutely. It's about creating a more sustainable and equitable future for everyone.
Well said. So there you have it, folks. Our look into DTE Energy. We've explored their financials, their growth prospects, the risks they face, and what the technical indicators are telling us.
We've tried to give you a well-rounded perspective, considering both the positive and the potential downsides. Now it's up to you to decide if DTE Energy deserves a place in your portfolio.
And remember, as always, we encourage you to do your own research. Don't just take our word for it. Dig deeper, challenge our assumptions, and come to your own conclusions.
That's the beauty of investing. It's a journey of continuous learning.
Thanks for tuning in to Investing Talk Podcast. Don't forget to subscribe, share this episode with your friends, and leave us a comment. We love hearing from you.
Until next time, happy investing.